Look at this logo, Hyundai ADM Bio. To a casual investor, it looks like a standard clinical service provider. But to a consultant, it looks like a ticking clock. We found a $21 million deficit that isn't just a loss, it's a massive turning point. Is this company burning its last bridge? Or are they building a rocket ship? Let's dive into the data. Imagine the traditional CRO market as a crowded elevator. It's cramped, and it's barely moving. Hyundai ADM Bio realized they were stuck in the wrong building. They're making a quote break pivot, betting the entire farm on one proprietary engine called Penetrium. They aren't just running trials for others anymore, they want to own the cure. Now, let's look at the grocery money. Their core business, running trials for other people, is leaking. From $7.2 million down to $6.8 million in just 12 months. That's a 4.8% drop. In consulting terms, that's a red flag. In plain English, their old way of making money is dying. They are effectively setting their own safety net on fire to force themselves to fly. Here's the million-dollar question. Actually, the $21 million question. Can a company that's used to filling out forms for others suddenly become a world-class drug inventor? It's like a librarian trying to write a global bestseller while their bank account is overdrawn. The only way this works? They need a massive out-licensing win, and they need it fast. Where is the money actually coming from? Half of it is from LPS. That's basically checking if drugs work after they're already on the market. It's stable, but it's not buy a private island money. Then you've got 4.6% from renting out their office space in Penyo. When a biotech firm relies on rent to keep the lights on, you know the core business is under pressure. They are essentially big fish in a very small pond. 98% of their business is in South Korea. If the local government changes a single policy, this company loses its oxygen. To survive, they need to play in the big leagues, the US and Europe. Right now, their international footprint is thinner than a piece of paper. This is the most important slide in the deck. Forget the science for a second. Let's talk about survival math. They have $3.5 million left. They burn over $3 million a year. Do the math. They have exactly 1.1 years before the lights go out. They aren't just running a trial. They are running a race against bankruptcy. How did they stop the bleeding? They pulled a classic financial move. They convinced people they owed money to, bondholders, to take company stock instead of cash. They wiped out half their debt, which is great for the company's health, but it means current shareholders now own a smaller piece of the pie. It's a survival tactic, plain and simple. Meet Penetrium. This is their secret sauce. A lot of powerful cancer drugs are like super soldiers who can't find the front line. They don't dissolve well in the body. Penetrium is the armored transport that delivers them exactly where they need to go. We're talking 10 times better absorption. This isn't just a small upgrade. It's a game changer. Most companies hide their spending by calling it an asset. Not these guys. They are brutally honest. Every dollar they spend on R&D, they mark as a loss immediately. It makes their bank statement look like a horror movie. $11 million in the red, but it means there's no fluff in their books. What you see is the raw, painful truth of innovation. In July 2025, they changed the captains of the ship. They brought in Keen Woo Jin, a guy who knows how to get drugs through the finish line, and Won Dong Cho, who has the political connections to find the funding. They aren't just scientists anymore, they've hired the fixers to save the business. This is the horse they are betting on, niclosamide. It's already IND approved, meaning they're officially entering the human trial phase for solid tumors. They are taking a drug that usually fails to absorb and using Penetrium to make it a targeted killer for breast and lung cancer. This is the all-in moment. 2026 is the year of destiny. Q1. The first patient gets the drug. Q2. They need to find more fuel funding. By Q4, they expect to be at the table with Big Pharma. If they hit these marks, the $21 million deficit becomes a footnote in a success story. If they miss, well... So what's the final verdict? Hyundai ADM Bio is a biotech startup wearing a CRO's suit. That $21 million loss? Think of it as the price of admission to the big leagues. Watch the safety data in early 2026. If it's clean, this company could moon. If core revenue keeps dropping, it's time to exit. High risk, high reward. Thanks for sticking through this deep dive. If you want the full-page breakdown of the biotech landscape, head over to HDINresearch.com or email our sales team. We find the data others miss. Don't forget to like and subscribe for more analysis.